Do you own a foreign company or have shares in one? Then you might have to file Form 5471, which is the dreaded form. And if you don't file it, you could pay $10,000 in penalties. So the 5471 is really one of the nastiest forms I've seen, and we have to file at Online Taxman for our clients. So essentially it is for US owners of foreign companies, right? And it is one of the most complex and frequently changing forms the IRS have. I mean, when we did the Tax Cut and Jobs Act in 2017, it was completely redone. And then even every year, there's more and more changes to the form, which makes it even more and more complex. And even if you own a small stake in a foreign company, you still have to report it. And again, the worst case is that if you don't report it correctly or you don't file the form at all, there could be penalties, which are $10,000. So what is the dreaded 5471 form? It is an information return form. It's not for taxation, although you can potentially be taxed via that form, via the GILTI tax. But it really is an information return for the reporting of foreign companies that are owned by U.S. persons. And it's long. There's different categories, which we'll get into. And as I said, the IRS keeps on updating it. So first off, who must file is based on the ownership of a U.S. person. So then what is a U.S. person? A U.S. person is not only a U.S. citizen, but it could be a green card holder, or even if you're a foreigner that is residing in the States, so you're a U.S. tax resident and, let's say you have shares of a family company or a company of a spouse, etc., you would have to file this 5471 form. Again, the U.S. people also include corporations, right? Partnerships, trusts, etc. So a lot of times we see, a startup in Latin America, for example, that has a C Corp on top because it has U.S. investors or even U.S. offices, but underneath it they have other subsidiaries. And since those subsidiaries are owned 100% by the C Corp, that's U.S. person, they have to file a 5471 form. Even a tax-exempt entity may have to file as well. So again, if you are a U.S. person and you own at least 10% ownership of a foreign corporation, then you have to file this form at least the first and last year of the company. And again, this, is not as easy as it seems. I mean, the first question, if it's a controlled foreign corporation where there's a U.S. shareholder that owns at least 50%, then it's called a CFC, and there's extensive reporting. If it's not a controlled foreign corporation, but a U.S. person owns at least 10%, directly, indirectly, or constructively, then again, this 5471 form needs to be filed. So again, it's really not just the percentages, but also looking at, again, what is direct ownership, what is constructive ownership, and what might be indirect ownership, constructive ownership, or what the attribution rules are, which means that if you have, let's say, a mother or father that owns part of the company, then again, that might be attributed to you, or a spouse that owns it. And also we have section 965, which is called specified foreign corporation. So again, there's a lot of categories with this form, and really depending on the category depends on the amount of forms and schedules that you have to fill out within the 5471 form. So basically, if it's a controlled foreign corporation over 50% owned by Americans, then of course it's a lot more in depth. It's only 10%, then the schedules are less. But irregardless of that, you do have to file it. If not, you will get the $10,000 fine. So again, let's look at a list of what the IRS considers a shareholder. Again, it could be individuals, it could be partnerships, it could be corporations, it could be estates and trusts, it could be nominees who hold the shares in the foreign corporation on behalf of others. It could be something known as beneficial owners who are not listed on the corporation books but have a right to receive dividends. It could be entities that own it in the form of a tax shelter. It could be really any entity or individual who owns the shares in the foreign corporation, regardless of the structure. And this is where it gets into direct or indirect, right? So for example, maybe you own a foreign corporation through another BVI. Well, a BVI holding company owns a corporation in Brazil, for example. Well, that means that you indirectly own the Brazilian entity via the BVI. So essentially one would have to report both foreign companies. So again, it's really complicated, and it does require a lot of analysis into the ownership percentages and what needs to be reported. Again, the other aspect of this is attribution rules. So there are Family attribution, right? So, shares owned by one family member can be attributed to another family member if certain conditions are met. I mentioned the point of a child-parent relationship. It could also be a brother and sister relationship, where if a parent and child own over 50% together, then again, it's considered a CFC. Attribution rules via entities. So again, shares that owned by a corporation or attributed to an individual who owns more than 50% of that stock. These are all ways where potentially over 50% of the company is owned by the ultimate beneficial owner, who's American, and by doing so, it's considered a CFC and needs to be reported. So going into the categories, you have category 1 for U.S. shareholders, you have category 2 for officers or directors of a CFC, you have category 3, which is when you acquire more stocks. Let's say I have a 10% ownership and then I acquire 40%. So then I, of course, acquire more stock and now I am a CFC, so I would have to be potentially a category 3 and a category 4 and 5. And so again, these different categories essentially outline the amount of forms or schedules that need to be filled out on Form 5471. So how to file Form 5471? First off, it is filed with your individual tax return. So if you own it as an individual, you file the 1040, you have to attach the 5471. Same thing if it's a corporation, 1120, and they own any sort of subsidiaries, then the 5471 would be attached to their 1120 return. Of course, I'm going to say best be done by an expert. Obviously, I'm biased, but more than biased, I'm being realistic. This really is a complicated form. I mean, the IRS filing instructions are 52 pages long. Even within the filing instructions, it mentions how complicated it is and how I think to fill a form estimated by the IRS is over 100 hours. So also failing to file the form is scary, right? You have $10,000 penalties for each time you don't file the form, and even possibly penalties for inaccurate or missing info. And if the form is not filed within 90 days of the IRS mailing a notice, an additional $10,000 is possible, so up to $50K max per company. So a little bit of a recap. The 5471 form, super complicated tax form, multiple categories depending on the ownership percentage, the amount of other U.S. owners. Attribution rules, again, can increase the ownership percentage. And then, of course, stiff penalties for not filing. And we have not even gone into things like guilty tax, subpart F income, and some of just the other concepts when it comes to actually filing the form and the taxation of the income, whether it's passive income, active income of the form. So if you have any questions and you need help with this form, reach out to us at Online Taxman. We've done tens and thousands of these forms for people, and we're happy to help. Thanks.